Okay, this is where we started with. This is this chart from Bloomberg over the weekend. See at the Nigerian market, and we said, we are the world. Look at how the Nigerian market started in 2018, roaring nearly 2 trillion naira. And we look at that red. It's red, but that shows you the importance just to highlight how we're looking. The Nigerian stock market is leading the world so far this year. The stock market performance, that is what you're looking at, is in US dollar terms, not in naira terms, but in US dollar terms. And that's what's from. Look at Nigeria there, about 12.1%. We're beating Ukraine to about 11%. The Russia RTS index, which is coming in at 8.4%. So we've got only one single market in double digits coming back to Nigeria, and that is Ukraine. The rest are in single digits. Italy, which is also one of the MSCI, is coming in at 8.2. Kazakhstan is coming at 7.7. These are markets that are emerging. Hungary, 7.5. Ghana, the second largest economy in West Africa, is coming in at 7.1, a distant position to Nigeria's number one. Greece is coming in at 6.9, same merging with Qatar. And you can see at the bottom page, you can see the entire MSCI EM index, 4.1% so far this year. So we're beating the big index by nearly 8%. And that's what we're starting this week with. So Nigeria is the world beater, the number one. Let's move on and look at the core numbers from the week we just finished. In terms of the equity cap, we did about 11%. Last week, we added more than 1 trillion naira to the market cap. If we take it from 2nd of January when we came back, that was Tuesday, the first trading day in the new year, we've done close to 2 trillion naira. Although on Friday, the market softened a little bit, below the 43,000, but we're still around that not decent or index reading. Look at the volume for last week. More than 5 billion shares were traded, one of the most active in recent weeks, and the naira value that will blow your mind, nearly 70 billion naira in 41,542 days. So who are the chief contributors to this? And that's what you see next. The banks are at a 12.8%, almost the same margin, with industrial goods by about 13%. So these are the two most actively traded subsectors last week. Then you throw in the consumer goods at 5.6%, insurance at a 6.5%, and the oil and gas about 7.5%. I'm looking at the oil and gas as we try to get our hands on the petrol scarcity. Let's look at those listed oil and gas retailers, with the exception of Seplat, which is an E&P company on our market. Corn oil continue to move on, trying to find a new price level around 40 with that volume. 40 oil, 52.62. That's now back at 50 per share. Mobile, which now Double1 PLC, added about 5%. Seplat, Owando, and Total were on change. Of course, we know the story all around Owando. But in terms of the volume, you can see that the volume keeps coming very heavily on the side of Owando, 52 million in the week we finished. And you find Eternal Oil there also making some decent gains, 4.43, to find a new price level heading towards 7 naira per share, one of the small caps on our market. I'm moving on to the over-the-counter market of the NASD, where we saw 0.36% trying to be a shy, use the mirror of the Nigerian Stock Exchange for the NASD, a much smaller market. We are yet to get the 600 USI reading back. It was 599.39, but the market cap is holding it steady around 400 billion naira. It's a bit of a very small week, less than 160,000 shares on Friday for 3.93 million. Local currency in 8 transactions. Let's go to the fixed income quickly, shall we? And that's why Romosele Aziba, who is one of the investment analysts at AfroInvest, is sitting down here in the studio with me this morning. Let's take a quick look at the FMDQ or OTC market. Treasury bills, that's where you started from? Yes, that's good. Okay, 117, nearly 120 on Friday. 4 most actively traded. Look at the yields, and that's what we're talking about. They're around the 13, 14.4, 13.8, and 14%. For treasury bills that are maturing between now and September. Take note of the treasury bills maturing 6th of September 2018 at about 14.4%. So the longer looks like the level of the yield that you see on them. The shorter, then the more compressed the yields really were. That's the FMDQ OT Securities Exchange. Move to the Naira bond, and we're looking at the DMO this week, whether it will make good the first Naira bond auction in 2018. That's about 17.3 billion, the secondary window on Friday. Okay, let's put Friday behind us. Or let's look at Friday last week and the first 2 weeks of this year with Ramosele. Good morning. It's good to be here. Thank you very much for coming.
Thank you.
The stock market seems to be the one playing the king as we speak. So not a very bad way to start the year on the equity side of things.
Definitely not. We've seen the strong sentiment in the market from 2017 linger into 2018, and this has remained the major driver of activities in the market. It's also safe. We also take note of the fact that expectations for results of most of these companies is also largely positive, and we can say that this has also driven investors' sentiment. And back in the office, we decided to even carry out some sort of analysis comparing what we're seeing in the market now with prior years, if there has been any situation like this. And from our analysis, we noticed that back in 2012 and 2013 have been quite similar to 2017 and 2018 that we're starting now. If you recall, back in 2012, we saw a significant rally in the market as oil prices recovered.
Rally, yes, as well.
And then we saw when the Nigerian bonds were listed on the JP Morgan Emerging Markets Bond Index. So that also led to a lot of foreign inflows come back into the market, and this drove activities, and it was sustained in 2013 as well. So if you look at that with the situation of 2017 and 2018, we saw oil prices start to pick up in late 2016, and this was sustained in 2017. So as oil prices rallied, we saw significant interest in our market. And then with the launch of the investors and exporters FX window back in April, which led to a lot of foreign